I have a few moments to do a bit of an update on what's happening here. Please take a look at the disclosure. Granted, it was much better to see what was happening yesterday versus, uh, getting aware of it today. So anyway, let's just get into it. I'm going to give it one more second here so you can read the disclosure, and then we will move on. And here we go. Okay, so let's get into it. Uh, my name is Scott Ruther, Chief Strategic Officer at T3Live.com, and I haven't done a midday little video since last week for everyone. Usually I do a morning call for Ruther All Access and a recap and a note and 14 to 20 charts to update and tell everyone how to navigate fast. So anyway, yesterday, if you guys recall, we talked about what was happening, okay? And I said to everybody right in here, I'm like, guys, um, it's early in the day, but we just broke above and didn't hold 2983 to 2987, which was this DT downtrend line. So it was a push through failure, meaning they induced people to get excited and long, squeeze some shorts out, and then it failed there. Put that with an ISM that's at a 10-year low and faulty action in tech, the small caps, you name it. Things have been basically bent and broken. So yeah, we were on our toes to see what would happen in the start of the fourth quarter. So you had that quick spot there, and then if you did not navigate here, then once we took out an inside candles low, which was 29.67, as an active trader, you had to sell if you were holding some swing longs, which not a lot of people are holding swings longs, because even though the market, the S&P was 1 to 1.5% off all-time highs, markets felt gross for weeks. The software SaaS cloud names have been pretty much on the defensive since August, and I would say over the past month we've lost stock by stock by stock, going from special to fine to bent to broken, where you can't sit in them anymore. So this right here was probably like a welcome sign for the shorts. So, okay, let's let the indices play catch up to the downside with these faulty names, which I've mentioned a few times. So anyway, here is your what they call a red dog reversal, meaning pushes above a level, gets some people in long out of their shorts, and then reverse. So now that's a trap. Now those longs are trapped and the shorts need to get back in. That's what causes a fast move. And anyway, we took out 29.67 to show the bears having some power. And then we took out 29.45, which I also put in that tweet saying, hey, if we close below 29.45, the bears are going to growl. What does that mean? They're going to go, no, it means that they're going to say, wow, that's pretty bearish action. Now I could sink my teeth into some of these shorts. Or if anyone was, with some leftover longs, I better get out of the way, because this engulfing big outside day shows power. When a candlestick shows power like this is a powerful candle. Okay, it means you should have some follow through in the days ahead. So everyone was like, Red Dog, how are you going? You've been flat for a while. You're going out short the spies. Aren't you scared? Aren't you a permable? I'm like, I'm not a permable. I trade the action. I haven't been in a portfolio approach since August, since the S&P was above the 821 day. Like here, I was in a nice portfolio approach. Once we gapped up above this spot and held and took out 29.40, this was a nice spot to be in a portfolio approach. This, in June was great portfolio approach. Okay, now we're after playing with the 8 and 21 day, now it's pure tactical, because you never know what's going to happen. Plus it's October and we don't have any kind of big China event till the 11th. So anyway, this was the morning. Okay, just quick commentary, which you could read on your own. But basically, filled this gap. So now this gap is gone. Delete, delete. All right, filled. And what now? Where this was that other level I was talking to you guys about that might hold. Okay, and at this point, it's trying to. Okay, this low of the morning now is what? 28.88, three handles below. So if you are trying to play this bounce, okay, if you're like, hey, you know what? I sold this trend. I sold things when they were positive. I sold things last week. I sold when we broke Monday's low yesterday. I was short coming in. Okay, I made cash flow short, meaning that's you, which I did actually, because I went out short the spiders and I covered a little bit too early, but I'm fine with that. Then maybe you could try a little bit, of the S&P or S&P cash versus this level. I personally would like to see, the 200-day hold. The 200-day EMA is now 28.74. So I would put that in there and say, if that would have happened faster, I think it would have been better. But you also can't rule it out, you know, this afternoon or tomorrow. If you want to remember this little area here. Remember, this low, this low, this low. All three of these lows. Remember this range, the August range that didn't break. Well, you almost could like keep this line going, and so this is still a pretty, important spot. This area. But I would be very careful as far as the long side. The Qs, outside day yesterday. My morning note, I was like, when we gapped up in the morning, because I was long Apple and I was long Amazon in the morning yesterday from Monday, I was like, I'm selling it to strength because I always take some of my trade off if the futures were my favor, and Apple was up like $1.50 yesterday and Amazon was up 12, and then I see what type of action. So my thoughts was, can the Qs which have lagged stay above 190 or not? So yesterday, did they stay above 190? They pushed some, they probably squeezed some short, same type of thing. Went as high as 190.59, came back below. That's a red dog reversal sell. Okay, right there. That's a false move. And a false move can create a fast move, and that's what wound up happening. So that should have got you out of whatever leftover tech names you had. I was out of most of my stuff by 10:15, 10:30, and gave you guys the warning as well. And then all of a sudden this took out this day, and now this 185.75, which happened to be the low of this pocket pivot, is now done. And this already is below. Okay, so if you take this little trend line, it's already below what I just showed you in the S&P. So if this is a leading indicator that we can at least test the S&P little trend from the lower range, you better be taking some care and not trying things too quickly. Right now, this is already on the lows of the day, it looks like, and here's your 200-day EMA. The 200-day EMA is 182.53, so might as well put that in. 182.53. If things get a little nutty later, that's a level to watch. Right here. Okay, but once again, this was your candle. This was the candle that said take care. Tech's been acting faulty. A little bit of a push through failure. Closed below a prior low. Be quick, or be flat, or or be short. So I was actually short, which for me, I'm not the best short out there. So something has to really show me that. So if you look at the the Qs now, I don't know. We'll see what happens here. I'm in no rush to buy. It's kind of no man's land. You just broke this inside range, held below this little, I would say, series of lower highs, and then you had this little false move, which created the fast move. And now, there's no reason to be long here, except for little tiny scalps versus a level. And if you're going to stay short, this is day 2 down. Day 2 down, usually you get the follow through. Day 1 is your shot across the bow. Get involved. Day 2 is your follow through. Then day 3 gets a little bit, harder to stay with the move. And by the way, the oscillator is like minus 90 now. Minus 40 is oversold, so it's hard to press. It's better to sell some strength, trade below a level, and then let it figure itself out. So I know a lot of guys who definitely lost money in the small caps. Let me see. It's working. Why did they lose money in the small caps? Because it was very streaky. And it was very hard. It was very easy to lose. The IWMs went from the low end of the range to the upper end of the range. I remember I waited till like 157 in the IWM before I started shorting it. And then I think I was just happy to get out even because it was like no pulling. And then guys got squeezed out, and then all of a sudden everyone's like, Red Dog, I'm buying this pullback from 159 to 155, 154. I'm like, okay, just be careful. And now they're puking it out into here. This is not an easy sector. Streaky from low end right into resistance, which was hard to hold during these days, to no real bounce at all, into now it looks like a little bit off the lows here. That was your Red Dog buy there. So I guess you could say 146.14 is your new point of reference. So you could put that in there. If we continue to rally off that, perhaps maybe the overall markets come off lows. But again, if you're active, this you'd be long versus. Let's see. Let me look at the 1 day for a second. A little bit of a wedge forming in the IWM. So I guess see if it leads to, yeah, see if this helps. Right now it's off lows. Let's see what the spiders look like. Spiders not as frisky. Well, not saying that even the IWM is frisky, but it hasn't, been down as much. So I would say people like what would change today, or what would relieve some pressure. I would say, I don't know, if the Bears want to keep some pressure on, they probably shouldn't get back above this 289, 289.12. And if it happens to break the morning lows here, you could probably get your push down to the 200 day. So this would be, the resistance area that the Bears want to defend if they want to keep the pressure on. And that's just for the day. Let's go back to the 1 year. So again, look here at the SPYs. So it's not even at this level yet, where the Qs are already through it. Let's push it through so you can actually. This was here. So anyway, we'll see what happens. I still say cash is king right now. Besides mini trades, and I've been sitting in pretty much both my active account, my swing account, have been in a lot of cash for over a month now. The most I think I've had on long side was 2-3 positions at once, where in a better market I'm long 10 to 14 positions and I'm trading around them and whatnot. So anyway, watch this level later. We'll see. So I'll go over two more like tactics on what to see before I go, because it's already 11:30 and it is Wednesday. This is your midday video. Apple was the best name 2 days ago. 2 days ago. And 2 days ago I tweeted to, besides Red All Access, to the public, I'm like, okay, someone's like, Red Dog, are you in a lot of Apple? Because this was Monday when it cleared 222. I'm like, I'm not in a lot of Apple, but I'm in it because the only reason why is because tech's not acting great, and it's the only one acting well. So maybe money's hiding the S&P to push it up on the end of the quarter, which you have to know when the end of the quarter is, because sometimes there's Fugazi shenanigans. And basically, it was a great trade on Monday, and then even Tuesday, it had a quick push. That's what pushed the S&P above probably that level that I showed you before, 29.85-ish. And then, once the ISM happened and Apple had a quick move lower, I did tweet and said, guys, I am out of Apple. If it does not hold 226.40, this could turn into a double top. It could turn into a topping tail. The rest of the market's not great. Be on your toes. So if you got out yesterday, you didn't have to deal with what's happening in Apple today. Okay, why did it look good 2 days ago? Oh, it looked great here because it held support and broke above this. So that's why I was long. Then why was 226.42 a key? That was a prior pivot. Okay, it pushed above, couldn't hold it. So one of my sell rules is if it gets above a level, can't hold it, you sell it. Okay, it means the momentum's not staying there. The strength isn't staying there. In order to get to 230 plus, it would have to hold 226.42. It didn't do it. So anyway, I sold some strength. I tweeted to Red All Access. I'm out to pre-market, which I was at like 225.50, and then I was out of the rest at 227-ish. I didn't get the highs. Went to almost 229. And then I was like, if it doesn't hold this, I want to be careful. Okay, and now all of a sudden, it got hit fast with a topping tail. Topping tail is usually a change in direction. We talked about that at the end of the day yesterday. I'm like, a topping tail is developing. Be careful. I'm like, I'm not going out short that. I'm going out short the spiders just in case, but I'm not going to be long it. And now, I guess got to see what happens here. Okay, this has already went from special to be careful to, very vulnerable. Here is your 21-day moving average, which it pretty much has held for a while. So if you could see this in the afternoon, maybe it's worth a trade. If that doesn't hold, this whole 217 area, has held. But false move, create fast move. So if this doesn't hold, be careful, because then all of a sudden, you can't rule out a move to the 50-day. When the S&P is going to the 200-day, the strong stocks usually go to the 50-day. So anyway, right now this is no man's land. This is a whole lot of nothing. Okay, it already took out this candle, and this would be at least a spot that computers might be looking at. So we'll see what happens now. 218.70-ish, and then this is 217-ish. If we got to 217-ish fast, I probably would try it, but it's been heavy all morning. So all the money hiding there is now saying, uh-oh, So anyway, we'll see what happens here. And this 50-day now is what? This 50-day is 212.57. So that's quite a ways down. If the market, if the market's really going to come in and we're going to have like an October last, the big money knows that, and they're not going to be buying it in here. And then, before I leave, because I can't get into everything, this is just like an educational, quick snapshot of the market, and plus a little candlestick analysis, because some of you guys need to educate yourself on that. Microsoft was the other better name. Okay, but then yesterday, you had a wide range bar engulfing candle that showed its face, gave a shot across the bow to get out of the way. And if you did so, you didn't have to deal with this. Okay, two things, two reasons to sell. What was one? Think about it before I get into it. One was it pushed above Monday's high and failed. I was right here. Sell signal number one. I remember looking at a 140. I'm like, wow, in the early morning, I'm like, wow, Microsoft's 140. That's when Apple was 227. I'm like, these two guys are trying to lead, trying. And then it broke back below. Uh-oh. If I was long that, I would sell. Oh, my God. It then took out the inside candle bar. My good friend Rob Smith would say that's inside and down. So anyway, it closed on the lows, below the moving average, below the prior day, on the lows, not even like this one, which was kind of odd too. And then that happened. So that's how you get out of the way or get short with a signal from a candlestick. So at this point, if you're a long-term investor and you're watching this and you're 20 years old, 30 years old, 40 years old, and you have a 401k and a 529, put it in every month. My wife's 401k was built during the financial crisis. She started in 2004, put her money in every month, and she did really well. Some of my friends also, 529 plans were built the same way. I'm not saying we're going to have a financial crisis or things are going to get crazy, but I'm just saying, if you just started 2 years ago and you have a 30-year time horizon, this is nothing. It helps your average cost. If you're 80 years old and you're living off of your your investment from back in the day, maybe you reduce and go to 40% cash and be a little careful. Hopefully your money manager did that for you. If you trade actively for cash flow and for a living like I do, you pay attention to the moving averages, your pivots, your sell rules, you watch what's leading what. You have if this, then that, if that, then this, and you have your process and you honor your process. Otherwise, you're not going to be in the business that long. So before I leave you again, it's 11:36 on Wednesday. This is your midday update. Take a quick look at the S&P. The S&P is making its way to here. I have actually some orders in here to buy the spiders near this 287-ish area. So I'm hoping it kind of gets there, and maybe there's a little bit of a trade here or not. But again, this was a red dog reversal sell, which I teach all the time. Traded above this area, went back below, then confirmed it with weakness when taking out the prior day's low, which was 295.92. Then it showed power by taking out this area, and now all of a sudden here we are. So if you're out there saying, how did this happen? You know what? That's how it happened. I'll see whether all access to the recap, and I'll post some charts here and there. Good luck the rest of the day.